please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra. We have a lot of news to reckon with, especially in terms of specific stocks. So while it might be flat on the index, what you can see is that there's a bit of a resilience as compared to our Asian peers. And for specific stocks such as Shriram Transport, Shriram City Union, a lot of news flow on those counters. So we'll be discussing all that and more in the next 1 hour. And obviously, there will be some possible news on MSPs through the day that we could expect.
So, I think, Ekta, hi, morning. The meeting is starting right about now, right? 11:30 or so. And the decision should be out any time after that. Depends on how long the meeting actually goes. But that is by far the biggest announcement today. An MSP for Kharif crops and what this would mean. The market is absolutely flat. There isn't anything at all. We got about a third of a point change. It's basically blinking green and red. The only index where there is some activity is actually the pharma index. If we can put the Nifty pharma index up, it's up 1.25% and more. Otherwise, I can't spot another index with any buoyancy whatsoever. And talking about pharma, it has been doing well now this week so far after taking a break the last one. It came up quite nicely over the last 20-25 days, took a break last week, and the action is back again in pharma stocks. We saw that large cap pharma, all of them actually, 6-7 of them did very well in trade yesterday. Otherwise, it's pretty lackluster. We'll get back to markets in a bit, but there are flashes at the bottom of the screen. This is important. The tiff between the governor and the Chief Minister and, of course, the cabinet in Delhi reached the Supreme Court. The Supreme Court actually has come out with its opinion on the matter. It's saying that the governor should sort of work in consultation with the cabinet, with the ministers, the cabinet in Delhi. Ashmit has been in the Supreme Court tracking this. He's joining in with some of the key sort of opinions expressed by the top court. Ashmit, over to you.
So this was a big constitutional confrontation that was, in fact, before the apex court. The Delhi government clearly pointing out, aggrieved by various orders of them having been hamstrung by actions of the Lieutenant Governor, had moved the apex court. The question that essentially the apex court was dwelling over is that as per Article 239 AA, is it the prerogative of the Lieutenant Governor to consider the opinion of the Council of Ministers? And if yes, is he essentially bound by it? Now, in what appears to be a massive victory as far as the Aam Aadmi Party government is concerned in Delhi, the apex court, in at least a majority judgment, has held the Lieutenant Governor is indeed bound by the aid and advice of the Council of Ministers. In fact, the CJI, who was pronouncing the judgment, spoke at length about the need for a collaborative federalism, for a pragmatic federalism, wherein there is some form of consensus and cooperation between various constitutional stakeholders. And in pursuance of that principle, the apex court has held is that the Lieutenant Governor must not act in a mechanical manner, that any and every order that is passed by the Delhi government should not be forwarded, should not be referred to the president. Only in cases of genuine discomfort or disagreement between the two sides, only in those cases should the president be consulted, and the matter should be consulted to the president. And even in such cases, the difference of opinion of the Lieutenant Governor should be rational, should be reasonable. And what's interesting is that what appears to be perhaps a word of caution, a word of warning to the Lieutenant Governor, is that the apex court has also recorded as a part of its judgment that the Lieutenant Governor, being the administrative head, should not play the role of the obstructionist. These, of course, are the initial observations that we are getting from the judgment. As the day continues, we'll get the order copy as well. Back to you.
Ashmit, this is more in the nature of advice from the Supreme Court, right? Would this, because it's at the end of the day, the interpretation would be left to the Lieutenant Governor again. How to interpret this, in what situation it should be taken up with the president, etc., etc. Would that be correct?
Well, as far as laying down of the principle is concerned, this is a big U-turn, is what we essentially have. Because essentially what the Delhi government had held back in the year 2016 is that the LG is the administrative head, and second, perhaps more importantly, that he is not bound by the aid and advice. That was at the epicenter of this entire crisis between the Delhi government and the Lieutenant Governor. The question being that in matters where the Legislative Assembly of the Delhi government has authority in those matters, is the Lieutenant Governor bound by the aid and advice? So towards that extent, the principle has been laid down very clearly by the apex court. The apex court doing a U-turn from the Delhi government's order, making it very clear that the Lieutenant Governor cannot be mechanical, cannot be obstructionist, and is bound by the aid and advice of the Council of Ministers of the Delhi government. So clearly on that part, the principle clearly has been laid down, but of course these are just the conclusions that have been read out as a part of the open court. We'll of course get more details once the judgment copy is made available.
All right, Ashmit, we're going to leave it on that note. Thanks very much for joining in. Well, we need to concentrate on the markets now because it's the mid-cap index which is seeing a little bit of a profit booking now. So mid-cap index down around 0.3%. Nothing really to write home about. So it's still down only around 60 odd points. But we do have a weak advanced decline ratio on our hands as well. It seems as though pharmaceuticals are seeing follow-on buying from yesterday. So Lupin is your top gainer on the Nifty, up around 2.8%, followed by Dr. Reddy's and Sun Pharma. Bajaj Finserv back close to almost 6,000 rupees for that stock. So 5,975 rupees for Bajaj Finserv at this point. So Darshan Sukhani joins in to talk about the technicals of the market then. So Darshan, hi. Not much in terms of the index, but specific stocks continue to move and attract attention.
Yes, the index is best avoided. There's an intraday short sale still available in the Nifty Bank, and with small modest targets and proper stop loss, but we could see a range bound day in the indices. As you said, stocks offer opportunities almost always. The opportunities are now on the short side. That is only for today. So Tata Steel is a short sell. The stock hasn't actually rallied, not participated in the rallies that we have seen in the Nifty. So there is a sense of weakness that still pervades even after the news and everything else. That's a short. The second short is CEAT. CEAT is in a bear market. It is now being joined by the other tire companies. So there's a theme now, a mild bearish theme in the tire business itself. That's a short sell for the day. And just to balance it, Pharma, as you said, was upbeat, and Lupin is probably looking very cheerful for the day. So Lupin is a buying opportunity. It's likely to be a very range-bound day.
Put up Shriram Transport. It's down 16.5% now. So, I mean, actually, it got to about 1,052. There was a very sharp cut which came through, and then it's actually pulled back a little bit, but still 16% lower. What, half an hour back, we had a 13-14% kind of a cut. It's the other story which we're going to focus on in some detail. But Sudarshan, technically, where do, previous important supports, etc., come in?
Well, a significant support comes at 700. So it's so far away that it's not worth talking about. Traders should not dabble in it. They should not try to buy this as a bottom fishing expedition. Just stay away.
Okay. So Darshan, the other stock I just wanted to ask you about is HEG. Would you probably recommend a target of say 4,000 on that stock, just based on the kind of gains that we've been seeing in the past couple of days? It's currently at around 3,700 plus.
No, I can't suggest a target. You know, these two, three stocks are just running away. But I would say that traders should be very careful. If you want to enter it, then be aware that you must also exit it. And the investors should not dabble in it.
Okay. All right. Well, a couple of Twitter queries for you, Sudarshan. So let's get that going. Piyush holds 200 shares of Capital First at 560, 300 shares of Sterlite Tech at 300. What should he do? Hold or sell?
Well, Capital First is a sell. There's no sense in holding it. NBFCs are likely to go through much more pain. So why wait it out? You'll probably get other companies and different prices later on. I would say you get out of it. Sterlite Technologies is in an uptrend. What we have seen is a deep correction because the uptrend was also very sharp. At current levels, it's a hold. I think a bounce could easily take it to 360, where you can evaluate and plan to exit if you wish. But it's a hold as of now.
Okay.
All right. Sudarshan, thanks very much. Appreciate you joining in with that perspective, those trades and that advice. Yogesh Mehta of Motilal is also with us. Yogesh, good morning. What would you be trading?
Good morning. Since markets are consolidation between 10,600 and 750, it seems that quite a few opportunities are available both the side, buy and sell. We are recommending RBL Bank as a buy. Today it has already been run up. 575 is the current price. We believe that it is on a making a mid-June it has made a 575 rupees, and again it has touched in the bear market. So it's a buy opportunity at current price, keeping a stop loss of 559, and target could be in the range of 600 to 610 level. The other one is we are looking at on a buy side is Tata Elxsi. It is making continuous higher bottom formation, and it has said 1375 yesterday. Today it is available 1347, keeping a minor stop loss of 1325. Target could be in the range of 1410. And one which we are initiating short is Idea. Currently price is 55.75 to 56 rupees. It is a perennial downtrend continuation. Previously it has made of 50.50 was the low. So we are projecting target of 51.5, keeping a stop loss of 57.75.
Okay, all right, we're going to let you go on that note. Yogesh, thanks very much for joining in, taking us through those strategies. Well, for the Nifty, just about holding 10,693, a few points lower from the last time we mentioned it. And for the mid-cap index, a marginal underperformance. Take a break. But up next, we're going to be speaking to Jean Fang of Moody's Investor Service on a whole host of macro issues, including the impending MSP price hike for Kharif crops, fiscal implications of those, as well as the new plan to fix stressed assets. So stay tuned for that conversation.
There isn't anything at all on the Nifty. There's a 5-point change. 10,694 is what we have. Mid caps and small caps aren't doing very much, and neither is the Bank Nifty. I mean, Shriram Transport, we should actually put the stock at the bottom of the screen up once again. It's slipping again. It's down almost 18% now. I mean, what a fall. So that is 1,070 rupees. That's a 230 rupee fall coming in on Shriram Transport. Okay, Manisha is here, as always, to talk about commodities. But I guess more important than what's happening with commodity prices, we're going to talk about what the government is going to offer to buy some of these commodities, especially the Kharif crops. MSP, the decision should be out today over the next couple of hours. Manisha, I mean, let's just sort of lay out a preview in terms of what are we expecting?
Well, absolutely, Prashant. The cabinet meeting is begun is what we understand, and the expectations have been high. It is already delayed by 1 month as when the MSP should have been announced. But remember, it has been a lot of hard work for the government, and we understand that the proposal has now gone into the cabinet and it is on the agenda as well. As of now, of course, 1.5 times of the A2 plus FL cost is what we are looking at. A2 means all the input costs like the seed, fertilizer, irrigation, etc. And the FL is the unpaid family labor cost. So 50% above all of that is what we are looking at. And this would also be over and above the MSP of the last year. So markets are, or rather Niti Aayog itself has said that you could see an increase in MSP in the range of 4% to 44% as well in sense of some crops. So of course, unless we see a very sharp hike or over-expected, that would actually pose an inflation risk, and that is something that the bond markets, currency markets would be keeping an eye on as well. The other important thing, of course, is that you get MSP for 26 crops, which is inclusive of 7 cereals, 5 pulses, 8 oil seeds, and some more crops like sugarcane and raw cotton, etc. But what we are essentially looking at today is the 13 Kharif crops. That would be most important because the sowing has begun. We are more than halfway into that, and the farmer distress, as what we have seen in more than last year, is something that you would be looking at to tackle, especially in this season. Another important thing, of course, is while the MSP announcement would happen today, it really is going to be about the implementation of it. As of now, what we understand from Niti Aayog, from the Agri Ministry as well, is that they are looking at 3 schemes. One is the price support scheme, the other is the market assurance scheme, and the third is the price deficiency procurement scheme. So while we have seen various states and various commodities using this kind of a scheme already, would be yet again important on how the government actually seems at the methodology and, of course, the implementation as they would see looking forward from there. So while, of course, we would be looking at the numbers, but the next important thing would be the implementation part of this. Joining us also is Aurobindo Gayan to, talk more about that. Aurobindo, hi. We're not talking about the, the non-agro space today because agri definitely takes precedence today. MSP hike could be coming in an hour or 2 from now. What is your sense how the agri commodity is behaving, and is there a strategy that really evolves right now?
I think this is the move that we have been waiting for this season. I think you have already explained about the A2 plus F2 scheme altogether, and we are hopeful that some of the numbers would actually range between 4 to 20 to 30% kind of increase in the MSP figure. Yes, I would say that the millets are going to be very, very supportive as far as this decision is going to come in. And of course, as you said also, that Kharif crops are going to be important to look at it, because how much the MSP is going to really come in. Like, let's take an example of cotton or soybean. They are around 3,050 and 4,300 currently at the MSP now for this 17-18 crop. As far as the 18-19 crop, let's say we are assuming on 25 to 30% increase in MSP. I'm sure, being too large crop in India, they are going to have a significant impact on the farmers, and this is going to be value additions for that. As far as the point that I would like to comment here is the real implementation is the concern. In fact, the last year we had seen the purchases of procurement of commodities at the MSP price has not been that great from the government side. So I would directly comment here that we are hopeful to see more procurement to take place on the implementation of the new MSP that is going to come in a couple of hours' time.
Oh, well, absolutely. More states' participation, and as of now, we understand only 30% of farmers actually make use of the MSP. So that number is something that the government would be looking to increase as well. Arvind, one more question to you before we let you go, and that really is about getting uncompetitive when it comes to exports. Because when you look at paddy, the expectation is that we will see an MSP hike of 13.5%, and that would definitely lead to higher rice prices, and thus the kind of exports India does in sense of rice, those prices also will go higher. So are we looking at much higher prices for the finished product, and does that actually make us uncompetitive in the international markets?
Well, I would say the today's paddy MSP for grade A is around 1,570 rupees or so, and as for the expectation, it should be around 1,750 or 1,780 kind of rupees per quintal. So if that kind of rise in MSP taking place, I'm sure we might see some sort of increase in the paddy prices in the Indian market. But I wouldn't be able to make much comment on this. But I think there will be an increment in the MSP of paddy for sure.
And of course, with the kind of rupee depreciation, that would hurt the exports a bit if we actually see a very high MSP price.
Okay, all right. Well, that will be important from a fiscal standpoint as well. Thanks, Manisha, for taking us through all of those cues. But to take this discussion forward on the macros, we have Jean Fang, the Associate Managing Director at Sovereign Risk Group, Moody's Investor Service, joining in now. Jean, hi. Thank you very much for joining in. Well, we're still waiting for what exactly the hike in terms of the MSP prices for Kharif crops would be. But there is an estimate that the additional pressure that the government could see would be to the tune of around 30 to 33,000 crores. What is your sense in terms of how much pressure it could probably entail when it comes to the fisc in India?
Hi. I mean, it's good to speak to you today. I think that the overall impact on the fiscals, we think, is manageable. I think we're looking at maybe 0.2% of GDP. We still are of the view that the government is well positioned to meet its fiscal deficit target of 3.3% of GDP this year. And I think when we had made those projections earlier on, we did know, we did take account for some impact from the MSP. So I don't think we have changed our view with respect to the government's commitment and ability to meet those targets. And we think that on the backside, there may be some room for the government to cut back, perhaps on planned capital spending, if there's a risk of missing the fiscal deficit targets by a wide margin.
Jean, some believe that, a plain vanilla MSP hike, even though it might be substantial, may not be enough, especially given the fact that, it's a politically sensitive year, last term for the government as well before elections next year. The government may have to announce some sort of a glide path towards much higher MSPs over the next couple of years. Do you think, that is something that is possible, and how would that be taken if announced?
Well, I don't think we have a view as to how much is actually enough from a political perspective. I mean, I don't think we take a view on politics in general. I think we'll have to wait and see whether or not there is a glide path towards ratcheting this up in the future. But I do think that our medium-term view still takes into account the broader commitment that the government has made to fiscal consolidation, and we do think that that commitment is serious. And so, when we look at the new Fiscal Responsibility and Budgetary Management Act, we do think that there are some tools being set in place so that in the long run, whatever happens to specific budget items, we do think that there is a broader commitment to fiscal consolidation, and I think that's baked into the stable outlook we have on the ratings.
Okay. How would you approach growth in the context of higher MSP prices, higher crude prices, as well as the government probably trying, eventually pulling back in terms of spending in order to maintain its fiscal deficit target?
Well, I think that inflation in general is beginning to pop up as a risk. I think more importantly and more directly, we do see higher oil prices and rising interest rates simultaneously as two of the biggest factors that could potentially impede growth for the Indian economy. And I think that's been factored into our latest growth forecast. So taking those into account, we've adjusted our growth forecast for 2018 down from 7.5% down to 7.3%. But that being said, I think that we're still looking at 7.5% growth for 2019. So we think that looking at MSP in isolation is probably not as useful as looking at the several factors that are building up now, including oil. And I think we've taken that into account with our 7.3% forecast.
Jean, you also have looked at banks very closely. I'm told in your earlier avatar. I mean, just tell us what is your view on this new proposal to set up AMCs, asset management companies, which are going to buy large loans from banks to free them of stress, free banks of stress. Many say there are lots of unanswered questions, not enough clarity. But if you have taken a look at this, what's your view?
I think we tend to agree that it's all about execution. There are a lot of unanswered questions, mainly around the funding of an entity like this. I mean, in principle, I think it makes a lot of sense to have more credible buyers in the market. I think that's going to improve liquidity around some of these non-performing assets. And I think that the idea of settling these on a cash basis is certainly a more direct path to resolving the asset quality issues in the banking system. But how this type of asset management company gets set up and who's going to fund it is really an important detail. If this ends up getting funding by the banking system, then indirectly, the banks will still have some exposure to these problem assets, and that doesn't really get us far enough in terms of resolving the overall bad asset issue.
Jean, the RBI came out with a report recently indicating that, gross NPAs could be higher as compared to what was anticipated or as compared to the year earlier. What is your sense in terms of where exactly gross NPAs could be for the banking space on an average, say, by the end of this year?
Well, I think the additional disclosures have all been good in terms of providing greater transparency to the banking sector. But I think that we've always taken a view that the problem assets should take into account not only the reported non-performing loans, but also some of the special mention loans. And in particular, in our analysis, we've been able to speak to the banks and look at a certain set of, I think, at-risk corporates that we've also factored into our numbers. I think roughly for the public sector banks, we were looking at something like around 13 to 15% of the loan book could be impaired, and I think that's the amount that we would want to prepare for when we think about any type of recapitalization plans, or if we want to more broadly think about the amount of funding that's required to resolve the bad asset issues.
Jean, just one last question. I mean, Moody's had conducted a survey amongst investors in June, and I guess oil prices topped the list of risks that investors see with India. Are these, I mean, mostly bond investors? Are these stock market investors? If you could just talk about that a little bit.
Sure. Well, every year we do a conference for credit investors. in both India and in Singapore. And so this was the fourth year we've done this type of conference, and the conference attracts a lot of market participants, not just investors, but also intermediaries and some issuers as well. And every year we tend to do some surveys of the audience just to see what the key credit issues are for the market more broadly. You're right, oil came up as the #1 factor that could present a challenge to the Indian economy, and as I mentioned earlier, I think we're broadly in agreement with that, and as a result of oil and rising interest rates, we've adjusted downward our macro growth forecasts for India down to 7.3% for 2018. So yeah, that's a result that's widely shared. We saw that as the key challenge facing the economy in both Mumbai and Singapore when we did the survey.
Okay, all right, Jean, we're going to let you go on that note. Thanks very much for talking to us. So that's the view coming in from Moody's. Need to take a break now. But up next, we'll be discussing market technicals. Ashwini Gujral will be with us.